commodities, and let's just start by taking a look, see where we closed for the week. Starting out on corn in the March contract, up a half a cent from last week on the settlement at 3.85. Soybeans a big winner this week, up almost 52 cents at 10.46 in the March contract. Wheat settled not quite 3 cents higher at 4.26 in the March as well. Cattle futures up $3.70 in the Feb contract at 118.52. Hogs were able to close $1.62 higher on the week at 65.60. Looks as if the dollar still trading at this time going to be about 100 points down around that 101.20 area. Crude oil looks like it's going to be a little bit weaker on the week, somewhere around $1 lower as well, down there around that 52.50 area. And stocks still having trouble trying to break through that 20,000 mark, and the Dow looks like it's going to close a little bit weaker off last week's settlement at this point, somewhere around 19,800 at the time of this broadcast. Taking a look at the drivers this week in corn and beans, pretty simple. One of the more major reports of the year, the quarterly stocks report, and the monthly supply and demand, where we incorporate our final yield into the balance sheet. But the quarterly stocks is the one that leaves a lot of uncertainty. It's a snapshot of how much corn or beans is in the countryside at that point in reference, or that point in time. And taking a look at the corn stocks, came in at 12.384 billion bushels. Corn, that's actually up over 1 billion bushels than last year, and it was actually higher than average trade estimates slightly as well. So that was somewhat of a negative force weighing on the market. Still plenty of corn out there, bigger stocks than expected. When we look what they did with the balance sheet, when they brought in the final production number, it was actually a smaller production number. We slight reduction in acres, and we seen bushels get reduced 0.7 of a bushel. We came out at 174.6. That compares to last year's final yield at 168.4. So we did see that production number down a little bit, give us a final production number just a hair over 15 billion, 15.148 billion bushels of corn. We all set that on the demand side of the balance sheet with an increase in ethanol of 25 million, but we did see a reduction in feed demand to 50 million. And looking down the road right now with the strong margins that we have seen, and the strong crush we've seen, and or grind we've seen in ethanol, probably could see some improving numbers there. But to a lot of analysts, that feed number still looks a little bit overstated, so those two probably offset each other. Still plenty out there. When you put all those numbers together, you still come with a carryout of 2.35 billion bushels. That's down from 2.4 billion bushels last month. Really a very quiet report as far as corn is concerned, and we've seen the reaction upon the release of the report, a little bit of strength, but only to settle basically unchanged on the day. And some of the strength probably came from the release of the soybean numbers. Soybeans a little bit friendlier as far as the release of the information. Not so much on the quarterly stocks. We came in at 2.895 billion bushels. That's up over 100 million bushels over last year. Actually about 175 million bushels over last year, and that came in just maybe slightly under the estimated range there. So not a big move as far as the quarterly stocks were concerned. But I think the big surprise is we did lose 60 million bushels off our balance sheet, and our carryout number came in at 420 million. That's down 60 million from last month, from that 480 million carryover. That was a big shock, and one of the bigger drops we've seen in the S&D report, and that came solely on production cuts. So the trade not only did lower yield a little more than expected, down 0.4 of a bushel. The trade was actually probably looking for a little bump up in the yield in this report for an average guess. That came in as a surprise. And also probably the bigger surprise is they they took 400,000 acres off of the production number. So that brought our production number down a little bit more than any of the trade had estimated, 60 million to be exact, and then left the balance sheets alone. So we left the crush and exports alone at this point. Take a look at the world ending stocks. We're still seeing plenty of corn, beans, and wheat out there. I should mention that wheat, the big number in wheat was the smallest winter wheat acres planted in over 100 years. We go back to actually about 1909, I think, is the last time we had wheat acres this small, or winter wheat acres this small. So that is something to think about moving forward in the spring planted acres, where are those acres going to go. But when you step back and take a look at these stocks from a world perspective, we're still holding in there with large world stocks for both corn and wheat and soybeans as well at this point. Reports behind us. Where do we go from here? South American weather becomes center stage now. Not that it wasn't far off center stage, but it is center stage at this point. We'll continue to monitor that. Concerns about getting the last few acres of corn and beans planted in Argentina is a concern. Too much moisture, and there is some concerns in Mato Grosso where they're starting to cut beans and starting to plant their safrita corn crop, that a little bit too much moisture there could hamper harvest. That's something to keep an eye on in days, if not weeks ahead. 3-day weekend, no report on Wednesday. That gives us a 3-day weather weekend with South America. That could create still some volatility in these markets. When you look at the structure of the charts right now, beans obviously broke out to the upside. Looks as if we could see a repeat or a test of nearby highs, or at least that'll be the area of resistance after the large explosive gain this week or upon the release of the report. At least corn still looks like it's stuck in the mud, and it's going to have to be drugged one way or the other at this point. There isn't a concern as far as supply is concerned, and there isn't another crop in the world growing right now. We grow the corn crop. South America and the United States share the bean crop, so two different dynamics working there. Lastly, keep an eye on the demand side or weekly exports. We did see the last 2 weeks exports fell below estimations. Maybe China is done in here buying beans from us. If we see another week or two of this, then we know it's done, and they're switching those cargoes over to South America. So keep an eye on that next Thursday morning. Taking a look at the livestock markets, cattle futures have been probably the biggest winner, or so it seems, as far as the rebalancing, index fund rebalancing this week. This is when the major investment banks reallocate what they're doing with their commodity positions. Corn, wheat, and cattle and hogs were to be the winner of that going into the rebalancing, and we did see a fair amount of buying into cattle futures. We were able to close it higher this week. Open interest has gained significantly, suggesting there is a fair amount of money flying into this contract right now. Cash has not traded hardly yet this week. It looks to be steady to $2 weaker. The majority of the cash is probably going to trade here this afternoon. But we did close very strong right at the top end of the futures, and we did see the strong buying on the close again. Again, today's the last day of that rebalancing where they're coming in to buy their cattle futures. Packer margins probably got shrunk. Still good. I shouldn't say they're good, but they're still making money, but the margins certainly have been shrunk here. The past couple weeks, we were seeing the boxes fall off while cash is holding in place, so some shrinking margins there. Looks to me like the cattle futures are going to need to see some follow-through next week, right here up at the upper end of this range. I think the volatility is probably still in here to play yet. We did see boxes a little bit stronger, but there is a seasonal tendency to see the boxes weaken off a little bit here after the holidays. Keep an eye on those. Hog futures were the leader for weeks to the upside here. We're seeing cash catching up at this point. The rebalancing is coming into play. Maybe not as much apparent as it is in the cattle futures right now, but we did see it this week. It looks like cash is caught up or has trying to catch up to the futures-led rally. It's been a strong cash for the last 10 days or so. We're seeing strong gains in the cash market. We did see a little bit weaker cash this morning, but the cutouts, the pork cutout was very strong. Packer margins continue to be good, shrinking as well, like the cattle, the beef packers, but they still continue to be good. Keep an eye on those deferred futures, anywhere close to $80. June, July is an excellent opportunity to get some profit and/or hedges sold, locked in. When you look at the front month right now, 66 to 62 is the defined area in the February contract. We closed right up there at 66. We have not been able to close over 66, only trade above it. The charts are looking a little bit toppy. Looks like to me we need to take another step and continue this rally higher, or we could see some retracement. I think it'll be a very important week or beginning of the week for the hog futures. So with that, if you have any questions, please feel free to give us a call here at BIS Commodities at 1-800-373-2525.